All right, hey there students. In today's video, I'll be talking about how to calculate return on assets. We'll go through what the definition is, talk about the formula, and then go through a big example problem, and I'll walk you through it. Let's get into it. Okay, so return on assets, what does that really mean? Well, when you think of the word return, right, in any financial ratio, return really just means income. How much net income was returned over what? And in this example, it's going to be assets. So as you see in the definition, how much income was generated during the fiscal year? And assets is stocks, machinery, cash, equipment, vehicle, building. There's lots of examples of assets. So it's total assets. Now, the important part here is that it's total average assets. So we're going to have to actually average the last 2 years together divided by 2, right, to get your average assets. And that's going to be on the bottom of the equation. On the top is going to be your net income. So that's really what return on assets is, and then how to calculate it. Fairly simple. Let's jump into a problem here. Okay, so in this example here, the Kings Corp, they're going to report $350K and $45K in total assets in 2020 and 2021 respectively, meaning $350K in 2020, $45 in 2021. Now, they reported pre-tax income of $292,000 in 2021 and had a tax rate of 30%. So there's going to be 2 steps here we got to take to calculate our return on assets. So the first thing we're going to do here, step 1, we need to calculate our net income because they gave us our pre-tax income. So that's very important. So we'll move step 2 down so we have some room here. Now, to calculate net income, what we're going to do is this. So we know our pre-tax income is $292,000. So there's 2 ways to do this. I'll show you both ways just so you can know. So the first way to do it, you're going to take $292,000 and you can multiply it times the tax rate, which is 30% in this example. So I'll just write it out so you can see it, and then I'll multiply it here so you know. So 292,000 times 0.30. And I'll move this over. So this right here actually is going to be our tax, the tax amount. And then to get our net income or after-tax amount, we take 292,000. We subtract out the tax we just calculated. And so that's going to be our net income. Now, there is actually another way to do this, and I'll move this down again. Let me just show you. I'll call this step 1A, and then we'll just say step 1B. Okay, so the other way to do this, what we're going to do is instead of taking and multiplying times the tax amount, then subtracting the tax, we're actually going to do this all in one step. So to do that, we do this. We take 292,000, which is our pre-tax income, multiply it times 1 minus 0.30, 1 minus the tax rate, and that gets you your after-tax income. So I'll do it in Excel here. So we'll say equals 292 times, and we'll just say 1 minus 0.3, which is easy to math, 0.7. And there we go. You notice it's the same exact number, right? But we did it quicker. And as I like to teach my students, any efficient way to get things done, especially on tests, right? We need to do that because it's going to save you time. I know it seems small, but over multiple problems, it can actually save you a lot of time. So let's go ahead and focus on how we can save time. Anyway, so we got our net income. It's 204,400. Now, step 2 here, we got to go ahead and calculate our return on assets. So total average assets. Now, to do this, we have to first go ahead and average out our assets. How do we do that? Fairly simple. You just take both years, so 350,000 for first year plus 485,000 and divide by 2. There you go. So our average assets is 417,500. That's what we just calculated there for step 2 to get our average assets, the bottom part of the equation. Now for step 3, I'm going to go ahead and do the formula. So it's net income over total average assets. I'll write it just so you have it. Net income divided by total average assets. And then we're going to just make this a lot bigger so you can see it. Now what we're going to do is just plug in to the formula, which is nice. So we say equals net income, which is this number here, divided by the number we calculated up here. And there we are. We have a return on assets here of 0.48. You can say 0.48%, or sorry, you can say 48% or 49% if you round up, or you can keep it in decimal form. Either one works. And what that really is just showing is how much income are we generating for every dollar of asset. And they're generating around 50 cents per dollar is what this says. It's actually really good. So basically half of your assets, right? Or you could say more of like half of your assets is income. So for every dollar of assets you have, you generate around 50 cents on the dollar. And that's a very solid ratio for this company. So that right there is how you calculate return on assets. We went through what it is, the formula for it, and then went through a big practice problem where I showed you exactly how to calculate return on assets for the year 2021. So hopefully this video was helpful. If you liked it, please like it and consider subscribing if you haven't already. I release videos usually every single week to help you pass your accounting classes or just learn accounting in general. So once again, thanks for watching, and I'll see you in the next video.